Hey guys, welcome back to another episode. Today, what I want to do is take a closer look at AMD. The stock dropped nearly 8% today on Thursday, and we can see the stock is sitting at roughly $165. AMD is my number two position in my overall portfolio, but in the past few episodes, in the past few a month or so, I have been talking about AMD and how I did not like its current valuations. Now that the stock has kind of taken a nice hit from its 52-week high, we can see from its 52-week high, the stock is down nearly 20%, almost 20, over 21% at the moment. I want to just share my overall thoughts of what I think about the valuation right now. And do I consider this kind of a dollar cost averaging? Am I buying the dip? Well, let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So first, let's just kind of take a closer look at that price action. Looking at almost a 10% decrease in one day, you would have to think, hey, something must have happened to AMD right now. There must have been some crazy news that came out that is overall impacting the stock. From what I can see, and maybe you guys can let me know in the comments below, there was nothing outside of more just an overall market event, and we'll talk about that market event, but there was nothing market specific. We can see AMD was down, but the rest of the tech market was down too. Intel was down roughly 1.5%, but remember, Intel was down about 8% yesterday. If we take a closer look, I kind of covered that in yesterday's episode, where Intel talked a little bit about their foundry business, and they talked about how they're taking a huge loss right now in the foundry side. So in the past 5 days, Intel is down nearly 9%. NVIDIA, if we take a closer look, was down roughly 3.4% today. And in the past 5 days, the stock is down roughly 4.5. And if we take a closer look, there was nothing crazy except one of the members of the Fed board did announce that they are a little bit more hawkish, or they don't believe rates cuts are going to happen. We can see here that Advanced Micro Devices stock, AMD sinks 8.3% as Fed official downplays interest rate cuts. And some people are, I guess, are comparing this. Hey, look, if interest rates don't cut, it's going to continue to put pressure on a lot of markets like the consumer market. And we do know that AMD is obviously dependent in the consumer clients, in consumer laptops, and consumer desktops, and also some of the other solutions for the gaming space. So maybe that is what's causing some fear here for AMD and causing that stock price to drop roughly 8.2%. The other thing is, like I mentioned, AMD is my number two position, but AMD has definitely seen a nice overextension in its stock price. And I don't just mean in forms of kind of stock price returns. I think stock price returns don't necessarily tell a full story. We can see year to date, the stock is up nearly almost 20%. In the past year, the stock is up 80%. I'm not too worried about the percentage base. I'm more worried, or what I've been worried has been more its overall PE ratios. Before we go any further, I just want to say thank you all for the amazing support we are getting in this channel. We're closing into 40,000 subs. That is insane. So if you haven't and you are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support this channel a little bit more, check out my special offer at fool.com/Jose. Now back to today's episode. So if we take a closer look at AMD, and let me just take off NVIDIA here, and let's just look at AMD at the moment. AMD's PE ratio right now is sitting at 318. But you know, if you are in the semiconductor market, current trailing 12 months has been a little bit different with over inventory correction, and that's really causing PE ratios to look a little bit inflated to some extent, a lot inflated, right? 318 is pretty high. But if we take a closer look at PE ratio forward, and forward is the end of this fiscal year, so roughly the next 3 quarters, because we're already about to end quarter one, or we ended quarter one already. So for the next 3 quarters, the PE ratio is expected to be 45.41. I think that's pretty expensive, right, compared to the next 12 months. Now, if we take a closer look at forward 1 year, which is the next fiscal year, so about a year and 3 quarters from now, the end of 2025. PE ratio is around 30. So things are pulling back down, but we can see just earlier this year, around March, that number was closer to 40. And that's when I really, and even in the mid 30s, and that's when I really took a closer look at this company and said, hey, look, right now, there's definitely that growth opportunity for AMD in forms of their MI300X, but it was getting too crazy in forms of valuations or too ahead of itself. Especially if you've been watching my previous episodes, we heard from AMD's management that, hey, look, the 2024 is going to be just a base year for AMD's MI300. I think so many investors are hoping 2024 is going to be a crazy, crazy year for their AI accelerators, just like we saw last year for NVIDIA. So previously, I've mentioned, right, when I took a closer look at forward 1 year PE ratio, and for those that just remember what I mentioned, forward 1 year is the end of next fiscal year. So about a year, almost 2 years from now. AMD for most of the year was a lot higher than NVIDIA's PE ratio. And that really kind of struck me very odd because obviously NVIDIA is the one dominating this space. And that kind of showed me that, hey, look, the market is valuing and expecting a lot of from AMD this year. And like I mentioned, I don't think it's gonna do great, but it's not gonna do amazing, amazing numbers that some might be expecting. So while that valuation between NVIDIA and AMD kept kind of going in opposite ends, I started to think, hey, look, AMD was not my company to add on to. I'm still very bullish in this company, so I have no intentions of selling, but it's not a company I was willing to put more money in. But now that the stock has taken quite a hit, right? We mentioned from its year-to-date high, the stock reached almost $210. So the stock is almost $50 cheaper than it was just a month ago, right? Just a month ago, it was sitting at those $211. So a $50 loss in just a month or so. Definitely, in my opinion, is bringing back valuations to some interesting levels, right? And what I'm really liking right now is now that AMD's PE ratio and NVIDIA's PE ratio are getting a lot closer. And this is where I am keeping a closer eye on this company. I'm not going to say I'm going to add. I personally would add to AMD once AMD's PE ratio forward 1 year becomes lower than NVIDIA. Because at that moment, I would feel that many investors are not expecting much from AMD in the short term. And that's when things, in my opinion, start to get good in forms of price action. Now, obviously, numbers right now are not too far off. So if someone was to add, I think this is probably a good time for dollar cost averaging. Obviously, the semiconductor market gives us great opportunities to those that are patient. And sometimes those opportunities come out of nowhere. Like we witnessed, right, 2 days ago or yesterday, we did see kind of that earthquake in Taiwan. If that earthquake was a lot stronger than it was, it could have been really, really bad news for the semiconductor space. And events like that no one would have foreseen would have caused great opportunities for long-term investors. So the market always gives us opportunities. Unfortunately, we just never know when those opportunities are going to come. But right now, AMD, I wouldn't say, I think I'm going to start retracting my previous discussions where AMD, I used to call it completely overvalued. I don't think this is a completely overvalued anymore. I think the risk to reward ratio is getting a lot cleaner. I think it can get even better than this. But right now, it's not necessarily, in my opinion, and I could be completely wrong, a horrible time to add if looking for long term, right? It's not the time to load up the truck, but I don't think it would be a bad time for me to increase position here or there. But like I mentioned, I think I'm going to wait more if that PE ratio ends up going below NVIDIA. And there's a lot of things that have changed between now and the beginning of this year, right? So at the beginning of this year, we were still trying to scope out how the GPU market was going to be, where supply chain issues going to fix themselves. Was there going to be room for a second player? How were investments going to continue in the AI space? And I think in the past 4 months from then, we've learned a lot about the AI space. The AI space is here to stay. The AI space is still going to be supply constraint. Big tech is going to continue to invest in GPUs and AI accelerators. And we know that big tech is also looking to somehow eliminate, even though they might not be able to, but they are looking for ways to eliminate that dominance of NVIDIA. And all that put together is making, like I mentioned, that valuation a little bit better for AMD. And before I actually close out the episode, I want to kind of see what the analysts are kind of expecting for AMD. So AMD this past year did roughly $23 billion in revenue. And this was definitely a weird year for them. They had inventory issues at the beginning of the year for the PC market. They obviously had some form of pressure in the data center CPU space. And we also know that in the half of the year, in the end of the year, we had weakness in the embedded market. So it was definitely a really bad year for AMD in forms of all the markets. It was a mixture of everything. So for this current fiscal year, within the next 3 quarters, analysts are expecting this company to grow roughly to 25, almost $26 billion. I don't think that's impossible, saying that now we're kind of increasing the consumer market. And in the second half of this year, we're going to most likely have an increase of the embedded market. And we're also going to have the added revenue of the MI300. The MI300 is expected to do $3.5 billion. That alone will be enough to kind of get AMD to the levels we're going to expect this year, the estimates, right? Because if we did $23 billion, an extra $3.5 billion in revenue will take us to roughly 26.5. So that's much higher than what analysts are expecting for this year. But like I mentioned, we are still seeing some weakness overall. So I believe for the current fiscal year, AMD will be able to beat expectations. Now, if AMD says that this is just a foundation year for the MI300, and analysts expect for the next fiscal year, this company to grow revenue by about $6 billion, and if this is just a foundational area for AMD, and we're still in the growth stage of the AI PC market, still in the growth stage of consumer and laptops picking back up, and now finally being in a growth stage in the embedded market, $6 billion, in my opinion, growth is not impossible either. So now it seems like AMD is getting closer to, hey, valuations are matching expectations, and that's what gets me a bit excited for AMD right now. But like I mentioned, I think I might be a little bit more patient in in waiting. If this goes into that 150 range, that's when maybe I might start dabbling down and increasing my overall position. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.